Hi everyone, welcome back to Be Rich. Surprise, surprise! I had Sashwath come in today. He happened to visit me today and I pulled him into the studio and I said, talk to you guys. He was like, Mama, not today. I said, no, you must because people miss you. And he had an interesting article we were talking about before we turned the camera on. So I thought we'll just dive into that article itself and talk about that. Instead of the other things I had prepared actually to make him get his opinion on. Maybe we'll do that another day. Today we're going to talk about Japan and Japanese interest rate. So tell the audience what we were talking about.
Yeah, so the Japanese interest rate has been ultra loose. And what do I mean by ultra loose? Ultra loose monetary policy refers to when your interest rates are very low. So you kind of get money for free and sometimes they pay you to take their money. That's basically what the norm has been in Japan for the past few years. Over the past decade at least, they amped up their efforts to get inflation going. And it's a testament to why a little bit of inflation is good for a country. Because if your country goes into deflation is a terrible place to be for your country, because when you have deflation, it's a spiral. So you're spiraling and you're going to become smaller and smaller and smaller until your grape becomes a prune and then you end up becoming nothing but more than a seed. That's what ends up happening when you have a deflationary spiral and you're not able to sort of shock the economy back into action. And I'll just quickly explain what the deflationary spiral, how it works. So imagine this, your prices are falling. Prices are falling, so businesses' profits are falling. And because businesses' profits are falling, you end up seeing that businesses start firing people. Because people are being fired, their savings increases, they start to consume less. And by consuming less, what do you think happens? There is supply, but there's no demand. Prices fall. Prices fall, great. Profits fall. So on and so forth. And when there is so much economic uncertainty, populations decline because you don't want to have as many kids anymore, because kids are seen as a sort of liability to a certain extent when you're a developed country. And you have all these liberal ideas floating around about how kids have autonomy and they deserve education and so on and so forth. You have this idea of kids being a liability more than an asset. It may be a different case for us Indians because we may not hold the same ideals and principles they might. So to us, kids may seem an asset rather than a liability. But to most Western countries where you see parents, kids are seen to be a sort of luxury you have. You know, you're able to pass on your genes, but you have to pay a price for passing them on. So your population is declining. You have less people going to work, less demand, less profits, and so on and so forth. And the deflationary spiral is now underway. How do I stop this? How do I sort of jolt the economy back into action? So now this is equivalent to a patient losing their pulse in an ER scene. And now the doctor has to come in and use the defibrillator to sort of bring back the patient to life. And how does the Bank of Japan do this? The Bank of Japan does this by reducing the interest rates. By reducing the interest rates, what the Bank of Japan aimed to do was basically to pump some money into the economy. They're not pumping it directly. What they're doing is they're saying that, I'm paying you to take some money from me and invest it back into the economy. So they're saying, take 100 rupees from me and buy something. Or if you're not willing to buy something, okay, that's fine. Start a business, because by virtue of starting a business, you have to buy something. You have to buy a roof over your head. You have to pay rent to someone, or you might have to buy pens, paper, office supplies. You have to hire one more guy for your business to run. There are so many things which a business entails, or you can go out and buy a car with that money. That's also fair enough. So by buying a car, you're paying, all your Mitsubishi, that's a company which produces cars. And now Mitsubishi is now going to hire more people because they're saying, oh wow, people are borrowing money and buying a car. This is the idea of trying to stop a deflationary spiral, which Japan has been undergoing. Now, what is happening? When the rest of the world moved in one direction, the rest of the world basically moved towards monetary tightening. Tightening means to increase interest rates, to suck money out. It's to basically tighten your belt. It's like saying, okay, I've had a great meal and now I'm going to loosen my belt a bit. That's what most economies did. And now they're saying, okay, they stepped on the weighing scale and they said, okay, I weigh too much. I need to tighten the belt a little bit to sort of lose some weight and appease myself. And that's what most economies, the US led this. The US Federal Reserve, the hegemony which the US dollar has over the world, they basically led this tightening. and the rest of the West followed suit, except for Japan. Now, Japan is basically the West of the East, and Japan went the other direction, and they said, "This is great. I'm finally seeing inflation. People are finally spending. I've been trying to save this patient for so long, and now this is amazing. I'm seeing sort of inflation. Let's not stop the good news. Let's get the party going." That's what Japan was doing. And Japan announced negative interest rates, and they had a negative 0.1 from what I remember of interest rates as the latest news which came out. And they had a cap on their long-term interest rates. So their 10-year yield was capped at 1%. Anything more, and the Bank of Japan will immediately swoop in, and by mopping up some of their bonds in the market, they're supplying the market with liquidity. And by doing this, we see that the Bank of Japan basically keeps interest rates below that 1% cap. Now, why are we talking about this? We've already talked about this. This is old news. The new news is basically that the Bank of Japan has come in and said, hey, things are looking good. I think we can afford to sort of remove our, hardline stance on having a 1% cap, and let's make it a referential rate. What does this mean? So the Bank of Japan is basically saying, okay, we're doing good. We're progressing. We don't need to have an IV drip into the patient anymore. Let's monitor the patient. However, we don't need drastic intensive care for this patient. That's what the Bank of Japan is saying. So in economic terms, the Bank of Japan is saying we are not going to possibly cap it at 1% anymore. If it crosses 1%, then we'll see what we have to do. But we're going to leave some wiggle room for bonds to move up. This is what the Bank of Japan has done. And the Bank of Japan's words alone has an impact on the market. So by saying this, the Bank of Japan is basically saying, hey, it'd be nice if you guys start bringing back some of the money you guys put abroad and bring it back to Japan. Because when you have interest rates, the possibility of interest rates climbing up, you see that money from abroad comes back in. So because of the ultra loose monetary policy, there was an arbitrage opportunity where 5% of all US treasuries is actually owned by Japanese investors. So by giving the possibility of an increase in interest rates, Japan is basically saying, hey, you might want to consider bringing back some of the money to our land. Why don't you invest with us? Why don't you bring the money back and support local businesses? Let's kickstart lending back in our land of the rising sun. And that's basically what's been happening. And your currency, Japan has been steadfastly trying to fight currency decline because of ultra loose monetary policy. Because the lower your interest rates, the more money goes abroad, and you see that your currency depreciates. What does currency depreciation entail? Greater exports, more expensive imports. That may or may not be a great thing for Japan. And Japan has actively tried to curb their yen from falling below 150 yen to a dollar. And they have more or less succeeded on that front to a large extent. And now what they're saying is by removing this cap, they're basically squeezing the guys who bet on a weak yen. They're basically squeezing them because no one expected Japan to come swinging saying, we're going to move away from a policy we've enacted for over 10 years. And that's basically what's happening. And they're trying to bring back some money onto Japanese land. They're trying to prop up the yen a little bit through market forces and not through Bank of Japan interventions. And this is what we've been seeing so far.
Okay. So, a little bit of history I wanted to give you guys. So, for people who are absolutely green with this, like me and Kesab, so for us, Sashwath understands this because he studied this subject, so he knows this. But there's a little bit of context to give this. Basically, what's happened to Japan is their economy is suffering from PTSD. In 1980s, things were all going very nice. 1990s came. So in that niceness, they had a huge bubble growing. Asset price inflation which was happening. Their economy was overheating. They had excessive easing in their monetary policy, meaning they were cutting. Money was being pumped into their economy freely. And all this led to huge inflation in their economy, and suddenly it overheated and it collapsed on itself. On the weight of its own economy, it just imploded. Like the Chernobyl reactor, it just had a meltdown. So that's what happened to that generation. And it was very, very traumatic for them to see them, because Japanese people also, we have to understand socially also, are very proud people. So from standing and everyone looking at them as, the leaders of the world, suddenly everything collapsed and they were being the laughing stock. and they retreated. The whole country retreated upon within itself, and it stayed there, and it's been there, I would say, for the last 30 odd years.
Yeah.
And that generation has slowly become old, and they've moved out. The younger generation has slowly come in, and they've kind of matured. So now they're seeing an opportunity to move away from this, because the memories of the 1980s and 1990s are far behind them. So this new crop of Japanese people have come, new economists, new politicians with a new vision. They're saying, okay, we made mistakes in the past, because they don't remember it. It's like how Anand says, most of us don't remember high interest rate environments. We have always lived in zero interest rate. Suddenly, we don't even know what it is. So we don't even know how to react to it. Same way for the Japanese people, it's the other way around. They've been living like this. So now they're slowly venturing out into this again. So it's a fundamentally new thing, like Sashwath said. What is the implications for non-Japanese investors like you and me? What does this mean if Japan does this? Well, what it means is Japanese country as a whole is open for business. All of us have always been saying China made, China made. We've been saying Japan doesn't make anything anymore. Whatever is made in Japan has become expensive. Well, if this continues, this trajectory continues, maybe in 10 years, we'll see a huge turnaround in that, where Japanese exports start picking up volumes, where Japanese society changes. They're working very hard. This is not just one approach. In the economy, they're working, but socially also in the demography, they're working, trying to encourage more and more people to have children, trying to foster women to have families and say you can have a work-life balance. They're trying to change the pay scale between men and women, and even the social engine of allowing immigrants to come in to live in Japan, they're trying to change. So it's a good change. It's a good thing that's happening in Japan, because we don't want to lose Japan as a country, and the Japanese people as part of our global society, we don't want to lose them. This is one of the ways they're trying to preserve themselves. And I think it's a good thing. Of course, it's going to have implications in the bond market in the short term, like Sashwath said. If Japanese people want to put money back into their country, they have to get rid of their US dollars and take Japanese yen. And there's going to be some fluctuations in the, bond market, American bond market. Yes, Japanese people hold a lot of American bond. So how fast, what's the magnitude of the shift going to be? We have to wait and watch. Because right now, the Americans will not want anybody dumping American bonds.
Yeah.
They'll want the world right now to consume more American bonds, especially when they need to go fund the Israeli war happening there. And they have other pet projects which is going on. The last thing they'll want is people saying, no, thanks, we don't want your bond. So China and Russia might be happy about this.
Yeah.
But this whole thing, this is what I was trying to say in the podcast. I mean, you'll see in the podcast coming up about conspiracy theories. These are all natural cycles. No one plans these things. There is no cabal sitting behind some closed door, secret 4 guys sitting, smoking cigars and saying, okay, we will do this. So they showed in the movie, because to make movies sell, they show this. We all know no human being can catch bullets with his hands, or, walk into a room where 30, 40 guys, bad guys, and kick all of them and knock them all down and rescue your heroine and go out. It's just there on the screen. Same way, realize these kind of things are natural cycles. Nobody's controlling them. It's a good news for Japan to come out of the wilderness it's been in. And it's also going to have implications on a global level. So we have to wait and watch and see how this plays out. I think you can take this one out.
Yeah, and that's not bad news at all, first of all. It depends on who you are, whether it's bad news for you or not.
Hey, value investors is good news.
Yeah, it's
look at Warren Buffett.
Yeah, it's great news. And yes, by interest rates going up, you'll start seeing some of the Japanese companies yielding even more. So they're already yielding like 5%. The conglomerates which Warren Buffett bought, they were on average yielding 3.5 to 5% in terms of dividend yield. And now with interest rates going up, interest rates act like gravity, very famously, as Warren Buffett, Charlie Munger, and then my uncles have echoed. So the idea is that you're going to have greater opportunities to buy Japanese equity at, already their valuation is great, but you're going to see even better valuations come about. And and with some money coming back into Japan, you'll see infrastructure development. And Japan already has phenomenal infrastructure, but you'll see more investment in terms of production. And hopefully we'll see their population trend sort of reverse a little bit, and them putting up a strong foot forward into geopolitics, because regardless of where you stand on the west versus east versus south versus north, Japan has always been a sort of great place to emulate because of their geopolitical stance. Post World War II, of course,
Yes.
not their imperial phase, but
Yes.
post World War II, their stance has always been one of poise, one of measure and maturity.
Yeah.
And it's great news that Japan's coming back to play cards with us.
I agree. And as a value investor, it's something to keep an eye on. Those of you who can make plays in Japanese market, it's something which you can watch with wet appetite, as they say.
Yeah.
Because as it opens up, there are going to be lots and lots of companies, Japanese companies, who are coming out with great innovative products. And who knows where the world is going to be taken with all this AI boom is also just coming around. So Japanese AI might be something to really watch. All of us who have grown up watching anime and Japanese science fiction can really see some great horizons ahead. Hopefully not Godzilla though. Anyway, thank you for watching the video today. I hope you found it informative and entertaining. It was great to have Sashwath with me and to do a video with him for you guys. And we'll see you in the next one soon. Bye.
Thank you.
Those who are desirous of meeting me can meet me in Kuwait on the 24th of November, the last Friday of November. After a successful meeting in Hyderabad, my team wanted to do an event in the Gulf again. It has been decided to do it in Kuwait, and hence I am there on the 24th of November, the Friday. Thank you. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.